Good afternoon, everyone. Welcome to our Q&A show. We are so happy that you decided to join us. This is the show where we discuss everything from your health to your insurance to religion. And today we are once again going to talk about insurance. Due to public demand, we have our insurance expert in the studio, Mr. George Nderitu. Would you like to say hi?
Thank you, Pastor Harry, for having me again on this show. It's my pleasure to join you once again. Thank you very much for having me around.
Awesome. So there were so many questions that arose from the show that we did 2 weeks ago about insurance, so we want to address those questions. But you know that I like to start with a quote, and I'm just going to say the quote that I said the last time, because I think it just truly applies here. Nobody really likes insurance. Insurance is like marriage. You pay, and you never get anything back. That is what most of us feel anyway about insurance. But I'm sure Mr. Nderitu here will tell us otherwise. So we're going to start with the basics. We're going to do a recap. What is insurance? Why don't you start there by defining what insurance is?
Thank you very much. Like we said last time, insurance, I'll try and make the language user-friendly for everybody to understand. To put it very, very simply, it is the pooling of resources. We pool our money together so that when one of us has a misfortune or an accident, that money from that pool can pay that person to compensate them and get them back to where they were before the accident or the damage or the loss occurred. So it is pooling together of resources to pay a particular person who within the paid up community, it must be somebody who has paid into the pool for the person to get a benefit.
I see. All right. We pull together our resources, and so that when somebody is in need of it, then we can give out that money to that person.
That is correct.
Simple enough. Yeah. Why should I take an insurance policy?
There are two reasons. One, there are those policies which we are mandated by the government of the country to take insurance on, and they are the ones that you will take on a voluntary basis.
Okay.
Motor insurance, there is legislation in the country.
Yes.
You must take motor insurance for your vehicle, and especially the minimum third-party insurance.
Okay.
Comprehensive is up to you. That one is, if you can afford it, you take it. But third-party insurance is what the government says, this is the minimum cover required to drive a vehicle on the roads of Kenya. Because that one will cover liabilities to other people besides yourself, the owner of the car.
All right.
The other place where insurance has been legislated is for WIBA. WIBA is also known as, Work Injury Benefits Act.
Okay.
If you have a workforce, the law mandates that you must compensate. Now, there's a small difference there. The law says you must compensate the employees.
Okay.
But if you don't have money, money, excess funds to compensate these people, the easiest thing is to offload that burden onto the insurance company. Because, for example, in the worst case scenario, if a person dies while working, the law says they must be compensated for 8 years.
In the future.
8 years into the future. And the compensation is always based on the last pay slip of that particular employee.
Wow.
So if you don't have money to do that, forward payment of 8 years for that particular employee, it is better off to offload that burden to an insurance company. So those are the two areas where there is legislation.
Okay.
The other ones are the voluntary ones. If you're going to travel outside the country, you will need a travel insurance. If you have a shop and it has stocks, computers, it has other foodstuffs, whatever stocks, just like the supermarkets or anything, that kind of entity, even the small shops, you can take an insurance to cover it against fire, against burglary. So those ones are voluntary. You can either choose to take the risk, you leave it open, and but again you look at the susceptibility and you choose to offload that through insurance.
All right.
Right.
So there is insurance which the government says is mandatory. You're talking
Yes,
about
indeed.
the auto insurance, the third party or the comprehensive if you want.
Yes.
And now the WIBA, the one where you are working somewhere and in case of an injury or death, the company must compensate.
The company must compensate, right?
Right. So those are the compulsory ones, and then of course the ones that are voluntary. All right. So that is why we need to take insurance. As much as we feel like we're not getting the benefit, it actually benefits us in the long run. Now let's talk about something which I know most of us wonder, what is that? What is excess?
Nice question, and very, very, it brings out the emotions. The excess, you'll always find excess in the property claims. That is, you find it in the auto insurance, because that's a property.
Mm-hmm.
You find it in your in the other insurances that we have of our various the other properties we have. If you've taken, for example, a fire policy, it has a nominal excess, very nominal excess. And in fact, there are some policies which may not have excess in the fire line, but most will have a nominal excess of about 1,000 shillings. But if you go to the rest, burglary, your all risk policy, where you cover against your money, where you cover against theft by employees, all of them have an excess. Meaning that excess basically means the first part of the claim, the first part of the loss that you will bear as the insured.
Mm-hmm.
Why it is irritating is because many people know and have always believed that the insurance is going to take 100% of the loss.
Yes.
But in all these cases where after reading your policy document and you see the excess clause, the insurer is saying, I will only take, for example, 90% of the loss, and you will bear 10% of the loss. Now, why it is very irritating is because most of us meet that excess clause after we have had motor accidents.
Yeah.
It's irritating because the insurer is asking you to give him an excess check or an excess payment of about at least 2.5% of the value on your car. And of course, it drives people, people knew all along. People know I'm comprehensively covered. But we are asking, as an insurance company, we are asking you to pay us something in the range of 2.5% of the vehicle value. So it drives people wild. Secondly, for your claim to be admissible, your claim amount or your loss amount must go above that excess threshold. So again, the small claims, as it were, they fall to the side because the insurer will not honor the claim. So that's what an excess is. It is a certain percentage of the damage or of the value of the property which is borne by the insurer, the insured.
And you wonder why people do not like insurance. I tell you, these fine print, written in fine print so that you cannot even see, to trick you. I tell you, I think it is few insurance agents that actually explain to the client that we're not covering everything. I'm surprised, even somebody with a comprehensive motor vehicle cover still has to pay a percentage.
It is in the policy document.
Mm-hmm.
It is in the contract. The policy document is your contract.
Okay.
But we don't have a very good culture in Kenya of reading our policy documents.
Okay,
so the excess is there. Mm-hmm. There is excess when you have material damage.
Okay.
That is material, what you can see on the car. There is an excess on that. There's an excess if the vehicle is stolen.
Mm.
There's an excess if the person who is driving the car is a novice or a learner driver. So those excesses are all there in the policy document. But many people don't, just the way we say in Kenya we have a bad reading culture, people do not want to read the policies. But every policy in the policy schedule, every motor policy, every burglary, all risks, fidelity guarantee, money, you name them, they have an excess.
And what you're saying is if what I am claiming
Yes.
is less than the excess, I won't even be paid.
That is correct.
I have no words. Viewers, I have no words about insurance. I leave it up to you about insurance.
But there's a bit of hope, if I may put it that way.
Yes.
On the motor policy, which is a policy which is taken by many Kenyans.
Yes.
The motor policy, if you take it on comprehensive basis, you can actually buy back. We call it buying it back. We can buy back that excess.
Okay.
It is called the excess protector.
Okay.
Which is a percentage of the sum insured of the vehicle, usually ranging between 2.5%. 0.25% is very minimal, 0.25% to about 0.5%.
Okay.
It is quite minimal because it is based on the percentage of the car.
All right.
So you can buy it back to make sure that during when an accident occurs, you will not pay excess. It will exempt you from paying the excess, but after the accident, it would be good to buy back that excess protector.
For the next accident.
In case another accident does happen.
Okay.
But when you come to the renewal of the policy, in case you've not done it in the ensuing period, it is automatically again renewed, subject to you buying it again at that point.
Okay.
So it is always a wise thing. If you're buying motor insurance, please, if you're buying it on comprehensive basis, insist on the excess protector. It is only 0.25 to about 0.5% of the value of the vehicle. Very friendly indeed, but it gets rid of headaches when you have an accident.
So I'd better buy that excess over protector at 0.5 instead of when the accident happens, I have to pay 2.5 of the car. Is that what you're saying?
Correct. That is correct.
Okay, those mathematics enter. People, make sure you buy the excess protector. Yes,
Excess
if you have a vehicle, please, it will save your life. Clearly, we are seeing this point. All right, thank you so much for elucidating what excess is for some of us who did not know or were a bit befuddled by it. Thank you for explaining. Now, we want to go on to still do a recap and just also still define some terms. What is a claim?
A claim is a formal notification that you give your underwriter or the insurer or the insurance company. Those terms, we talked about them last time, is a formal notification that you have been involved in an accident or there has been some damage to your property.
Okay.
So it is that formal notification that you give the insurance company to tell them, I suffered a loss on a certain date.
All right.
And in my estimation, I do require compensation because there are some incidences that people get involved in and they do not raise claims, but because they have looked at the excess, it could be minimal, so you will not need to claim, but there are those ones in your estimation, it goes beyond the excess threshold, and you will need to seek some compensation. So the process of seeking that compensation is what we are calling making a claim.
Claim, all right.
Right.
And just to be clear, so this excess, it carries on to every insurance policy, not just the motor?
It carries basically to, I can maybe name 2 or 3 policies which don't have excess.
Okay.
The rest of them have excess.
All right. Because you're talking about we're making the claim, I might not make a claim because it's below my excess. It is within.
If the claim, let's use figures to make life easier for us. If your vehicle value is 1 million, 2.5% of that very quickly is about 25,000 shillings.
Yes.
If the damage sustained on your vehicle is below 25,000, there will be no claim. Even if you make a claim, a formal claim to the insurance company, there will be no claim.
Yeah.
So those are the mathematics concerning that. If you look at the damage done as a result of maybe thugs who broke into your premises or broke into your shop and made away with the equipment worth a certain percentage, so it will be quickly to do your, look at what stocks do you have and quickly be able to do a quick calculation depending on what you find in your policy document, and do the calculation and know whether do you need to make a formal notification to the insurers for compensation or you will bear the loss yourself.
All right. So
Right.
this excess clause, it is in all insurance. You said there are very few exclusions.
Fire policy will have maybe a nominal excess, sometimes 1,000 shillings.
Okay.
The other one that doesn't have an excess is a group personal accident.
Okay.
Those ones you get compensated. Personal accident and group personal accident, you get compensated on what has been tabulated and has been agreed upon between the insurer and the insured, the insurer and the insured.
All right.
Whatever figures that you agree upon, that is what will be paid. But in the other instances where you have an excess, when you agree on the figure, then you deduct the excess.
Okay, so we are seeing that you not necessarily might have to make a claim. First of all, calculate and see if it is below the excess. If it is, know you are bearing that loss yourself. If it is not, the insurance can help you out. You can make the claim. Now, I have calculated and I have found it is above my excess. How do I start making my claim?
Depending on the type of claim, the most important thing is get a claim form and it's a questionnaire. Fill out to the best of your knowledge. Fill out all the details requested for, plus the amount you are claiming. By that time, when you're reporting, it would be good to have an estimate of the amount that you're claiming. After that, various claims have various insurance requirements. You will find in auto, you'll be asked to get a police abstract.
Yeah.
If you have a burglary and theft, you'll be asked to get a police abstract as well. In injury claims, where you have under a group personal accident or personal accident, you'll be required to give a doctor's opinion through a medical report.
Okay.
You'll be required to give the medical bills. So all the policies, and then in the other property claims, you'll also need to get a monetary quantification of what was lost. If it was money that got lost on the way to the bank, your employees were taking money to the bank and it was stolen, you are carjacked, it's also good to get a quantification of the amount. You've already put the amount on the claim form, but it's good to document how you arrived at that amount.
Okay.
Right.
A receipt or something. Okay.
A receipt, a copy of the withdrawal slips if you are able to get them, because they may have been stolen if they were all together. If not, if they were not together, for example, if you find a car and it's carjacked and all the documents are in, the bank can be able to give some proof that you did make a withdrawal of certain amount of money, which was headed towards the premises to pay wages or things like that. Okay. If that is the money that got lost, you can be able to document it. Or from the company, you are taking money to the bank after the day's collection. There must be a way you balanced the books and you know that you are taking to the bank certain collection amounting to this and you are carjacked and that money went. There is that tabulation. So every policy will have a tabulation of how you arrived at the money amount of claim that you put on the claim form.
Great. All right. So you've even answered my next question. I asked you how to make the claim. My next question is the documents I need. And I think you already talked about them. You might need an abstract from the police.
Police abstract is very important.
Yeah, or some receipt, something, if it's money that was stolen on the way to the bank. Some document to at least support medical report, record if you're claiming for health reasons.
For health reasons, yes. A medical report.
All
then
right.
there's also a lot of us who have insured their domestic, who have the domestic package.
Okay.
We lose our phones very often. We lose our laptops quite often as well. Not have the last receipt. You don't have your purchase receipt for your phone, or you don't have a purchase receipt for your laptop. It's always advisable to get a pro forma invoice for a current make and model. So that one, people normally will ask, where do I get I bought my laptop 5 years ago. I can't find my receipt. I bought my phone 2 years ago. I lost my receipt. I lost some documents and the receipt was there. It would always be good to have a copy. You can go to the insurer, a dealer of that particular phone or laptop and get a pro forma invoice for a similar make and model.
Oh, I wonder, would that be honest? Because the phone might have increased in price or decreased. Will I get the value? I'm just wondering. If I bought it in my laptop 5 years ago, right now there's a better model. I might not get, and maybe I bought my laptop for 50,000 then, But right now, if I get the invoice, it's saying it's 40,000. Then I'll be at a loss. How does that work out?
Insurance is taking you back to where you are
Okay.
at the time of the loss.
Okay.
So a similar make and model, we are trying to say, get a machine with similar specs.
Oh,
In the
okay.
electronic world, we are having a lot of changes that occur within a very short period of time.
Mhm.
Within 2 years, a particular model may not even be in
Market,
circulation. It
yeah.
may not be in the store. So get a model, a similar make and model.
Okay.
Now, there's something you will not ask me, and it also does raise eyebrows when such claims are compensated, because the insurance company will knock off depreciation.
Oh no. People, are you seeing the lament about insurance companies? Okay, let us hear
It would
the
be good to
rest.
know. Prepare yourself. If you have a if you have a computer, a laptop computer, which is
Yeah.
in its 4th year, more than 3 years old, again, depending on the way your policy is worded, which is very important, if your, by and large, if your laptop is in its 4th year, 5th year, 6th year going on,
Yeah.
I've picked laptop, it could happen to a mobile phone or any other electronic gadget, they will knock off a depreciation.
But how does that work, since have I not been paying premiums based on the original price? Or are the premiums also depreciating according to the depreciation of the object?
Very important, whenever the renewal comes,
Yeah.
it is always good to review the values that you have insured to make sure that they are in tandem with current market pricing.
So I keep on, if my laptop is 5 years old, and I just be like, okay, so now can you review my premium so that I pay the premiums according to how it has devalued or depreciated right now?
You bought your laptop maybe at 100,000.
Yeah.
It's the latest HP or Lenovo or whatever is in the market. After 3-4 years, obviously it would not cost 1,000. It may be working very well.
Yeah.
It may not cost you 100,000.
Yeah.
If you go and look for a similar make and model for if there are people with a few stocks in the market, you could find out it is costing you 70,000. It is you're better off reviewing to the 70. But in case you insist that you leave the prices as is and you insure it at 100,000, yes, the insurance will note that the sum insured of the machine is 100,000, but you are not. They will, if they compensate you and give you 100,000, they are giving you a new machine. But you have lost a 3-year-old machine, so they will knock off a depreciation. All right, there are certain rates. If you go to all insurance companies, they have their rates, and they'll knock off the excess.
Oh no! First of all, you're charging us depreciation. Then there's still the excess. On that note, viewers, let us take a break. We need to breathe, and then we are going to come back and continue talking about insurance with our insurance expert, Mr. George Nderitu. Stay tuned.
What is insurance and why have it? Life's full of surprises. Your friend suddenly has a spare ticket to see your favorite band. That couple whom you think will never get engaged actually do. And John finally buys a round of drinks. But what if life's little surprises aren't so great? Like breaking your favorite phone, or something far more serious. The purpose of insurance is to protect people from uncertainty of the future, when things don't go to plan, or when we need support for our life projects. And finally, to give us peace of mind for whatever's around the corner. Here's an example. Paul and Dave are neighbors. Paul decided to buy insurance to cover his home and its contents, but Dave bought the latest games console instead. A few months later, a freak rainstorm hit, and both Paul's and Dave's houses were flooded. Everything downstairs was ruined, including Dave's games console. While Dave worried about how he was going to repair his house and replace his possessions, Paul simply called his insurance company and submitted a claim. They assessed the damage, calculated the value of the claim, and arranged payment to Paul. He could then afford to redecorate his house and replace his ruined possessions. Here's another example. Tom's goal was to one day own his dream car, but his salary meant this dream would never be a reality. Tom didn't want to take risks on the stock market, so instead he purchased a life insurance policy with survival benefits. The policy was set up over a specific number of years and was guaranteed to pay out an agreed amount at the end of the policy term, as long as he was still alive. Tom simply paid the same premium each month, and at the end of the policy term, it paid out. Tom was soon driving around in his dream car. We hope you enjoyed this video. To find out more about how to buy the right insurance for you, visit generali.com today.
And we are back with the Q&A show. Thank you so much for staying tuned. Let me give a shout out to some people who are watching. Thank you so much, Steve, watching from Twapa. Thank you so much, Joyce, for staying tuned to our Q&A show. And also, Amos, we want to thank you so much for taking your time to watch the show. Now, we want to go back to our questions. Where we left off, it was talking about how to make a claim and telling us that whatever you've insured, there might be some depreciation. So your claim, they'll deduct the depreciation, and on top of that, deduct excess. I tell you, this is really hair-raising. Anyway, next, we want to now talk about the practical. So what if I get involved in a motor vehicle accident? What happens on the scene? What is the claim process? I am there, I have knocked somebody or another car or a motorbike, because we're in Mombasa, there are so many motorbike accidents. So, Mr. George, tell us, what happens?
Motor accidents are very traumatic experiences, and they require one at the particular time to try and not panic and maintain a lot of sobriety. And you'll find people have issues, especially on that particular area. First and foremost, if you find you're involved in an accident, and an accident can be with various items. Let's say there can be a vehicle to vehicle. You can hit somebody's vehicle. Somebody may hit your vehicle. You may hit, let's say, I'm also putting vehicle, I'm also putting motorbikes there. Another type of accident is where you hit somebody's gate or a Kenya Power post, or the ones that you also find them. Before we used to have Telkom Kenya posts for the landline phones. Nowadays they are using them for Zuku and others for internet and things like that, those kind of cables. If you find yourself in that scenario, the first thing you should do is actually call the police.
Okay.
The police are normally witnesses. And as you do that, as you're calling for the police, because it could be vehicle to vehicle, vehicle to bike, bike to vehicle, and things like that, vehicle to Kenya Power Post, and things like that, call the police to come to the scene of the accident, because basically we are saying that it is somebody's property. There's been an accident. It is not self-involving. Report it to the police. Because you need to have an independent witness. But you may also have a self-involving kind of situation. I've seen a claim where somebody has reversed into a Telkom post.
Oh. All
right. So the police, it's you. Mostly, it will be you against yourself, because there's really no witness of another vehicle there. So again, the next thing to do, depending on the nearest police station, and if the vehicle is perhaps moving and there's no damage, because some of these posts are very hard, the trees, you'll not do anything to a tree.
Yeah.
Drive to the next police station and report your claim.
Wait a minute. You said one is self-imposing and involving, and the other one is not.
Yes.
So what's the difference between me driving headlong into a Telkom post versus me? How is that one not self-involving, but when I reverse into a telephone post?
It is also self-involving.
All right.
But you look at the severity of the claim.
Okay.
It could be that you've damaged for example, you're reversing, you damage your rear windscreen.
Okay.
That's not very material.
Okay.
And the much that will be done to you is repair of the windscreen.
Excess manenos.
Now, the good thing with the rear windscreen or the front, there is no excess. They replace it as is.
Oh, wonderful, wonderful.
So we are still good guys.
Here is the silver lining, finally. Okay.
So, look at the severity of the claim. Again, you may be in a self-involving accident and the area you are in is not very safe.
Okay.
You don't want again to expose yourself.
All right.
You're better off, if you can move the car, move it and take it to the nearest police station.
Okay.
And report the claim.
If it is self-involving.
Self-involving.
But if it
but
is
where
not,
you have again, where it is not and it's vehicle to vehicle, vehicle to bike, or even vehicle to this post, and the vehicle is not moving, because you find them in some instances the vehicle is damaged, it's not moving.
Yes.
Go report it to the police. Just report it to the police.
Okay.
The police will issue you with a police abstract.
Mm-hmm.
Depending on whether there are injuries or not, they will tell you to go for to take the vehicle to NTSA for them to give you what is called an inspection report.
Okay.
So you take the vehicle, it will be inspected by NTSA officials. They will write you the report, and you will hand that in together with the police abstract, and now take it to the insurance company and make a formal claim. At the scene of accident, it would also be wise to call your agent or your broker or a known person within the insurance company and report that there is a claim.
Okay.
It's also good so that you report it as soon as possible. The essence in insurance is to try and report these claims as soon as is practically possible.
Okay.
Yes. After that, you've collected your police abstract from the police station. You've gone to NTSA. You've collected your vehicle inspection report. You go to the insurance company. You supply them with a copy of the logbook. Supply them with a copy of your ID or the ID of the driver. Mm-hmm. And also, it would also be prudent to get a repair estimate.
Okay.
But more or less, insurers will tell you, if you're not able to quickly get a repair estimate, take it to somebody who is on the panel. They normally have a panel who supply them with garage services.
Yeah.
So take the vehicle to one of the service providers. Then an assessor will be sent to the garage, assess the repairs, and then organize and do a report, send to the insurance. The insurers will now authorize for repairs for your vehicle, if it is repairable. Or if it is not repairable, then they will write it off. You'll normally hear people saying, my vehicle is a write-off. It means that the damages are severe, and the cost of repairing is maybe more than 50%, 45. Some people range from about 45 to 55%.
Okay.
So you take an average of about 50%. If the damage is more than 50%, then they will write it off. It's an economical repair, so they will write it off, and they will compensate you on the value of the vehicle.
Hold on. Compensate me, do you mean fully buy me a new car and there's no excess included?
No. They will compensate you based on the value of the vehicle.
Okay.
And the sum insured.
Yes.
Less the excess. If it is not excess protected, remember in motor, if it is comprehensive, you've been given a chance to protect that excess.
Yes.
If it is excess protected, they will not make a deduction.
Are you saying the way he's just nicely covering himself?
No.
If you have not taken it.
If you have not taken it, it's not there. Now, there are two instances where now, again, which bring problems.
Yes.
And you, again, the talk about the frequently asked questions. If you have taken your vehicle for valuation or not at the time of the accident, we are all encouraged, those of us who have cars, anybody who has a vehicle there and is on comprehensive insurance, my encouragement is always make sure that the vehicle is valued.
Because it might depreciate.
Because within the year, it depreciates. Again, check on the agreement you have with your insurance company as to the value, or not the value, as to the basis of compensation. You may have insured, let's take the figure that we have used of 1 million. The basis of compensation can either be agreed value or pre-accident value. Agreed value means you have availed the car to an independent assessor, an independent valuer who has valued your vehicle and has put an assessed value on that vehicle. For example, they have agreed with you that your value, that your vehicle is worth 1 million shillings. And you agree with your insurance company that, yes, for purposes of this year's insurance, it's 1 million, and I have a certificate from a valuer. Mm-hmm. If you don't do that, and perhaps it's with the same, with the same vehicle, if you decide that it is 1 million, and an accident occurs, and there is no certificate, then compensation will be on the pre-accident value. Meaning that an assessor will go to the site or to the garage, because with the vehicle we have said it's in the garage, will go to the garage and will give their own independent valuation of the value at that particular time.
When it's damaged.
When it's damaged. Obviously the damage to the vehicle may not be too bad. So they may be able to see the car, and mechanical engineers will be able to tell you
what it's worth.
What it's worth, because they'll be able to look at the year of manufacture. They'll be able to look at maybe at the point of the accident, what is the last odometer reading, and they'll be able to know your car has you traveled a certain number of kilometers since you bought it. They will look at the age of the vehicle, and they'll be able to give their independent valuation. It may or it may not agree with your valuation. If it does not agree with your valuation, the insurer will go with the pre-accident value as given by the assessor. Now, the challenge comes in that you insured your vehicle at 1 million, and the assessor comes and says you are better off compensating this person at 900,000. So again, it raises, issues. Why are you compensating me less? 100,000. And again, you'll say our insurers are bad.
I will not say they are bad. I will just say that they escape telling us the fine print. That is all I am saying. But I guess it's also, the onus is on us to make sure we also read the clauses ourselves.
Read the policy document. It is good to ask questions where you may not understand, because all insurance companies, they have a customer care desk. If you bought your policy through an agent or a broker, they have a customer care desk, and they should be able to explain to you what is in your motor policy contract or policy document, or any other policy for that matter.
All right.
Once now, again, let's finish with the process. Your vehicle is in the garage. It is repaired. The insurance will tell you, the garage will tell you to go to the insurance and request for a release letter. So you give them the release letter. It's an undertaking that we are going to pay for the damages. You go to the garage and sign a satisfaction note to confirm that the vehicle has been repaired to your satisfaction and to what it was before the accident, and you pick your car and go with it. So people will have issues because they don't know the process. Mm-hmm. And again, if again you've not been in touch, you're not sure of what to do, you'll always find it's confusing. What's the next step? How do we go on from here, and things like that. So that's one of the ways of having your claim, your motor claim compensated. Of particular importance, get the police abstract on time. Report it to they report the accident to your insurance or your broker on time, so that the process moves out and you are able to get back your car within the shortest time possible. But let's also say that we also have problematic claims in that the parts of the car are not readily available in the country.
Okay.
So people are complaining that the garage took too long with my car. People are saying the insurance is taking too long to compensate. Yet the problem could be with your particular model of vehicle. So it would always be good when you're buying the car, have an indication of where can we get the parts if they're not easily locally available.
So how long can we say is the turnaround time for my claim to be settled?
It's all dependent on the particular claim, but in principle, the damage to a car in a garage will depend on the severity of the damage on the car.
Okay.
So the damage, the garage owners normally give an indication. They will tell you that I will take about 4 days with your car, 5 days with your car. But these are machines. You put a particular part, you need to readjust it and do what, repaint it. So they will normally give you, and they will normally give an indication and tell you it's about 5 days work, 2 weeks work, and things like that. When you come to some other property claims, it's all on the speed of the person who is claiming, the insured. How quick are you to get, for example, you had your premises burgled, you had your shop burgled. Quickly, again, we go through the process, go to the police, get your police abstract, fill out your claim form, give all the supporting documentation. How fast are you able to get all that documentation? If you're able to get all the documents as per the requirements of the insurance company, once you have the insurance company is supposed to give you what is called a discharge voucher. And a discharge voucher, they should give you within about 7 days, 7 working days, 10 working days. Let's put it on the average, 7 to 10 working days.
All right.
And then once the signed discharge voucher is in, it should take you maybe another 14 days to get to get your check. But again, all this is a lot dependent on various, it differs from insurance companies, but we are saying on average 7 to 10 days to get your discharge voucher if all the documents are in, and another 2 or so working weeks to get your check out of the system. Some will even pay you in 5 days.
Wow, which ones are those ones?
Some
We
will
need
pay
to
you
know
in 5
those.
days, some will pay you in 7 working days.
All right.
So it is all dependent. Once the documents are in, how quick can we be able to get out your check? Depending on how a company's internal procedures.
Okay.
Yes.
So I must make sure that on my part, I do what's required. I get the documents from the police, the NTSA, and I make sure I make a
Right.
claim with my insurance company, and I inform my insurer. And hopefully the parts which are required, if it's a car accident, they're available, or I'm easily able to just provide the documents.
Yes.
Now, what should I do if I am not satisfied with your services?
In Kenya, we have what is called the Insurance Regulatory Authority.
Okay.
So if you feel that the insurance company is not meeting its part of the obligation, it is not meeting its part of the contract, then you are at liberty to raise a claim through to raise a complaint to the Insurance Regulatory Authority.
Okay.
They are open. It's a government agency, so they are open. Usual working hours 8 to 5, Monday to Friday.
That is something I'm sure you never knew. So there's somewhere that you can actually tell on the insurance people if you feel that they didn't they were not able to handle your case fairly, in your opinion. The Insurance Regulatory Board.
The Insurance Regulatory Authority, obviously, by the time you're going there, you have documents to prove your case.
Are you seeing how he quickly covers himself?
No.
Have
You see,
documents.
by the time an insurance company is refusing to administer
Yes.
your claim, they have reasons.
Okay.
And you have your own reasons as to why you feel the insurance company should be paying, why it should be paying your claim. So the IRA becomes like an arbitrator. They look at the evidence adduced on both sides. Because, for example, an insurance company could feel that the claim presented is fraudulent.
Okay.
So they will not pay. On your part, you could feel that this is a genuine claim.
Yes.
But the documents you're giving are not in agreement, and there is something that is not there. All the pieces are not there.
Okay.
So you can raise your complaint, and the Insurance Regulatory Authority will arbitrate and find out, what really is where,
All
to put
right.
it that way.
Okay. So make sure when you are going to the IRA that you have all the documents that are required, so that you can actually prove that I don't feel that this claim was fairly handled. All right, we are going to take a break, but before that, let us ask a question. Aside from paying for my excess, protecting my excess, is there ways that I can save money on my insurance?
One, always have your risk surveyed.
Okay.
That is where you easily make insurance saving is on the larger risks, because again the premiums involved are much higher. One, get a risk survey done. In the industry, industry equipment, industrial areas, warehousing, things like that, always get your risk surveyed. The insurance company can do it for you, or your agency, insurance agent or broker can also arrange for a risk survey to be done, and a risk manager from the insurance company or an independent contracted risk consulting company can come and walk through your premises and look at areas that you need to tighten your security, areas you need to tighten, to have proper procedures and things like that to minimize the loss. Another area is in auto insurance. Not much practiced in Kenya because of our system of rating. If you go to other countries, you normally start insurance on a very high rate, and every year, if you don't have an accident, you get what is called a no-claim discount, NCD, or you get what is a no-claim bonus. Some people call them no-claim discount or no-claim bonus, and you'll be given a discount up to the maximum discount that can be availed. In some countries, it is 50%.
Wow.
In some countries, it is even 60%.
Why is that not in Kenya?
In Kenya, we use what is like a net rate.
Okay.
So a lot of what you get, majority of what you get in Kenya is on net rate basis. So you're given a rate that, it's just one rate. And unfortunately for that rate, if you have too many accidents, it goes up.
Oh, okay.
Rarely comes down because of your claims experience.
But
So you can make savings. If you get a risk manager, they put in all the recommendations, and you implement the recommendations, you present that, you can be able to get your insurance to give you a bit of a discount. Again, in the long run, if you look at your total portfolio, your total insurance portfolio, you have taken your fire policy, you've taken your burglary policy, you've taken your WIBA for your employees and GPA directors and things like that. If in a particular year or the second year, you're able to demonstrate that you've not made a claim, it's a good risk, you can ask the insurer to give you a discount based on the performance of the total insurance portfolio. But again, if there's severity, the insurer can remove the discount. Okay. But again, you can make a saving through, one, the risk surveying, two, if it's normally not practiced in Kenya, but if you start on a high rate, every year you don't have a claim, you get a discount. And then three, if you're not making claims, you'll be able to get a saving.
All right.
Yes.
So those are three ways, or let me say two now that one of them is not practiced in Kenya, but those are ways that if you have insurance that you're able at least to save a few coins. Get a risk manager so that at least you can show that I have done everything in my part to be able to protect my property or whatever it is, so that at least you get a reduction there. And if your insurance portfolio on the whole, you have not made any claim, then there's a possibility of you getting a discount. Those are ways that you can be able to at least save money from your insurance. And with that, let's take a break.
Meet Karen and her family. Karen loves her family. Bill, Tommy, and Laura. And Spot, too. But what Karen doesn't love is constantly worrying about them. Whether it's while Bill is working his construction job, or Tommy riding his skateboard, or while Laura is at dance class. The fact of the matter is, medical emergencies happen when we least expect them. And when they do, without the proper insurance coverage, they can cost a fortune. Which is why Karen started shopping for major medical insurance. What she quickly realized, though, is that there are a lot of options out there. The worst part is, choosing the wrong one doesn't just mean paying a higher premium than you need to. It means not getting the coverage you need when you need it most, after an accident or a chronic or critical illness. Enter health plans for less. Instead of sorting through all the choices and possibilities yourself, why not have a professional evaluate your needs and create a customized plan for you and your loved ones? Start by filling out this page. Karen no longer worries about her family because she knows they've got the coverage they need. So, complete the form on this page and get a free customized insurance plan within 24 hours. Health plans for less can save you 20 to 50% and provide more benefits when you need them most. Complete the form now and find out just how much you could be saving monthly.
All right. We are back to our show. Thank you so much for staying tuned. I want to give a shout out to some people who are watching us. Thank you so much, James Kimani. Thank you so much, Liz Kinuthia, Wanjiko Wambugu, Lilian Oma, June Nderitu, and Titus Mwangi all the way from Azeras. Thank you so much for keeping it here at the Q&A show. We are continuing to talk about insurance with our insurance expert, Mr. George Nderitu. Before the break, we had been explained to some ways that we can save insurance. And right now, we have a few additional questions. So in addition to, you've talked about the various types of insurance. Last time you mentioned house insurance. So if maybe we can touch a bit on house insurance. You told us that it is good to insure your house. You can insure the shell, and you can insure things that are inside. Right. But somebody is asking, if I am remodeling or adding things to my home, do I need to add my insurance? Is there additional insurance?
It would be good to review what you're doing in the remodeling of the insurance, because remodeling could mean that you add a section. Remodeling could mean you add some contents within the house. So depending on the definition of that remodeling at that particular time, it would be good to review. Because if you've added a section outside, an extra room or something like that, then obviously the value of rebuilding that house should be should include that. The cost of reinstating that house, because if you're talking about the four walls, the shell of the house, if you're talking about compensation, we talk about it from the basis of reinstatement. If you pull that house down and you rebuild a similar house up to where it is. Yeah. So if you're remodeling the house, then you should involve the new section in the renewal, or even immediately it is done, communicate to the insurance that your house, maybe you've made an addition of about $500,000. Advise the insurers that now your house has moved up by $500,000 and pay that premium for that increase. Or if it is additional items in the house or additional things that you've done within the house that have made the value to increase, it would be good to also communicate that to the insurance company. And that also means that any new items that are bought would be good.
All right. So somebody is asking, it is the COVID period and we are working from home. What cover do I need for my home-based business?
If you're working from home, there's not much insurance in addition to what is there, because already if you have house insurance, your four walls are covered. You make sure that your medical insurance as a person is up to date. You make sure that maybe your car insurance, because you may now need to use your car, and as opposed to using a pool car for the company, you need to make sure that that is insured as well. So it is to make sure that your house insurance, your workers insurance is all up to date.
All right, whatever you need in that home-based office, make sure that it is insured.
It is there. If there are some people who have laptops, but they've never insured them because they work with them from the vicinity of their houses. You may need to insure it, because if you're working from home, you're working at home, but still you find that you could have limited trips outside to meet a particular client who needs to meet you, at a particular time. So it is good to have them insured, because you will leave the house with them. Your phone, we are working from home, but sometimes we will need to go to the supermarket to get our supplies and things like that. Have your phone insured, because at home it becomes a primary tool of trade. Mm-hmm. So it is good to have these tools of trade adequately insured and adequately covered.
Mm. Yes. And we'll take one more question. Somebody is talking about travel insurance. I know we are not traveling. We can't even go to Nairobi, let alone at least we can go to a different county. But somebody is still inquiring, this travel insurance, what is it for? What is it?
Travel insurance covers you for any accidental issues, accidental and or fortuitous, a big word there, fortuitous, unforeseen issues outside the country. Mm-hmm. If you get sick outside the country, you could go to a country, it's new to you, and the diet is different, and you have problems, with your stomach, and it could cause you to, in some extent, to be hospitalized. Yeah. That kind of illness, accidental illness, you didn't have it before, and you go there and you have it. That is covered, because it's not really planned for. What is excluded remember last time we talked about exclusions on policies. What is excluded if it was pre-existing?
All right.
If you knew you had that particular ailment and you suffer it in that country, that will not be covered. But insofar as accidental, those fortuitous illnesses, accidents that occur in that place, those are covered. There are also issues of loss of items. You could lose your property when you go to that country, a laptop, you lose your phone, you could lose your travel suitcase, and things like that. In addition to that property, it could get delayed. You have checked into the country, and you're told your bag somehow got delayed in your last stopover and is coming on the next available flight. So you may need to go and purchase some clothes to wear for a change, some toiletries, soap, things like that to use in the ensuing period. So you can give your itemized, you bought that to enable you survive for a day or two until your baggage comes in. So what will be compensated there is a reasonable cost of those items. It's not that you've been given a check to go
shopping,
shop the way you want. No, they will pay you at a reasonable
rate,
cost for those 2 days.
Okay.
Then also where you have delays, you're connecting a flight from one area to the other, and the flight gets delayed, meaning you lose, you miss your next connection.
Yeah.
You may have to add a little bit of money. A travel policy will cover that. Okay. And what else? I guess basically that is it.
Right.
Hijack is also there in case you're in that situation and there's that trauma.
You are hijacked. It covers hijacking.
What will be covered is like the trauma, the counseling that comes after that.
Okay.
So that is normally covered in that kind of policy.
Okay.
Right.
All right. Travel insurance, very interesting to note. Whenever this ban lifts and you need to travel, know that it is highly important to take travel insurance. And folks, that's all we have time for this show. Mr. Nderitu, thank you so much. Do you have any closing remarks?
As always, what I said last time, please always, if your children have a particular designated pediatrician, have a designated agent who knows you inside out, who knows your business, and you can be able to get time, sit with them, discuss your insurance portfolios. The good thing, if you get an independent agent, they will be frank with you. They will tell you when a claim can be made, when a claim cannot be made, and things like that. They have your back. They know what it is that they do for you. You trust them. They make sure your claims are getting paid. They make sure you're renewing your policies on time. Get yourself an independent agent who can be able to be your insurance department if it's a business, or your insurance partner to help you walk on this road of insurance. Thank you very much for having me on this show once again.
Thank you so much. I know we all hate insurance. We think it is super boring, but you can see it is of necessity. Please, you need to know about your insurance so that you can know the fine print. Today we have learned about excess. That thing has blown my mind away. Please, make sure you protect yourself from this excess. Buy that excess. Please, if you have a motor vehicle, I am campaigning for that. Otherwise, thank you so much. This is the Q&A show. I am your host, Pastor Harry. Thank you so much for staying tuned. See you next week, same time, same place. Be blessed.